Good morning, my Colorado friends. Randy Flett here. Today is Tuesday, June the 29th, and boy, we are continuing this bond rally, which is terrific for rates. And the rates go up category. The only thing that we really have is a Case-Shiller index showing that home prices increased by 3.8%, and in some areas is actually 8% in some of the geographical areas. Now, the bond market bulls are interpreting it primarily as this cause of price increase was caused by the tax credits. So it's really been discounted. Now the rates go down category. Consumer confidence actually sucks. It's really bad. It's actually down 52.9%. They were hoping for 62. Now in a good economy, consumer confidence is usually around 90 or above. We still have problems with Greece. Japan's economy really slows, and that really took a lot of people by surprise. And because of these things, the euro down, and the Dow tanks is down over 220 points earlier this morning. Now here's what's happening in the markets today. And once again, you can see that we're up, and we are even much higher. We're actually down 3 basis points right at the moment. And if we take a look at the longer term, is I keep on going back to March, and we've been having the stair step effect, which is also very healthy. Now we actually have two trend lines, and I haven't drawn them in, but primarily we have an upper trend line. If you draw it right through here, showing where we're at, and we also have a lower trend line down here where these stair steps are actually occurring. Now I've been talking a lot before about the 4.5 coupon, and I just want to emphasize a couple of things. Wait a second as it's coming up. Once again, you can see how we're doing. And before, when I used to said that we're at the 102 mark, I really got antsy and knew that there would be correction. But look at this. We've been well above 103 for a while. And let me take a look at even a longer term. And as you can see, once again, here's 102 would spike up and then would come down. And if you take a look, I mean, we've been staying up here. So this is a new trading range, and this is exciting for us. Now, what's going on with the lenders? As you can see, 88 of the lenders, improved their pricings by 1.67 basis point. Only 9 have actually decreased their price. In summary, we still have problems in Greece. Greece workers walked off their jobs in protest of cuts. Japan's growth really slows, and because of this, the Dow tanks. Because what happens is, anytime when there's all these economic, bad news, there's a flight of quality from the bond or from the stock market to the bond market. So when people are taking money out of stocks and putting it in bonds, that's good, but it's also bad for the Dow and for your 401ks and everything else. The 10-year Treasury pierces 3% for the first time in a long time, and that's exciting. And as I mentioned before, the Case-Shiller index was discounted because of the tax credit, and consumers are just feeling lousy. They don't believe that this is really recovering right now, and they're not willing to spend their hard-earned money. Now, the thought of the day: don't let yesterday use up too much of today. And this is by Will Rogers. He is a humorist, terrific guy from Oklahoma back in the early 1900s, and I'm actually an Okie too, so I really like this. Now, I'm guilty of this. When things happen, you shouldn't really dwell on it. It's like stubbing your toe. Just go on, get over it, and move on. Now, there's a reason that the rearview mirror is small and the windshield is large. We shouldn't be looking back at all the things that we should have done, could have done, but didn't do. And instead, we should be looking forward. We should be looking at what we can do today, what we can do tomorrow in order to grow our business. So once again, look to the present and to the future, and don't dwell on the past. And as always, wanting only the best for you.